Alright guys, welcome back, and in today's video I'm going to be doing something a little bit different. I'm going to be showing you a step-by-step approach as to how I trade market maker models. So just starting off here, I have a blank schematic of just an impulse retracement, impulse retracement, impulse retracement of just what a bullish trend of a market would look like. Now you guys already know this. The market does two things. It seeks old highs and lows, and it rebalances imbalances. Old highs and lows are external range liquidity, and internal range liquidity is imbalances. So when we're looking at our higher time frame view, which is the monthly, the weekly, or the daily, this is what we see. We're seeing price create a swing and then retrace into an internal range liquidity pool and then take out an external range high. Then we do the same thing and we repeat the same process. Price then retraces into an internal range liquidity pool after taking out the external range high and then seeks the external range high again. That is just how the market books price. This is just bullish order flow. But what we're going to be focusing on in this video is what is happening inside of this internal range liquidity pool on the monthly and the weekly and the daily, but on the intermediate term perspective, which is where we're looking for our executions. Because in order for us to capitalize on trades, what we want to be doing, we want to be trading with the trend. I want to trade in retrospect to what our higher time frame order flow is. So if I see price is bullish, just making higher low, higher high, higher low, and higher high, I want to be trading in buys. I don't want to be trading sells. This is why I prefer trading continuations and not reversals, because reversal trading would be me trading the price reversing from the external range liquidity pool into the internal range, which is against higher time frame order flow. So I would prefer to frame my trade inside of that internal range liquidity pool. So this is what we're going to be monitoring and how I view it and how I capitalize on price inside of here. Because when we have the retracement down into this higher time frame key level, what's happening on the intermediate term perspective is a market maker buy model is forming to then draw into the external range high, the original consolidation here, which would be the completion of a market maker buy model on an intermediate term perspective. So if we're looking at price on the monthly and the weekly and the daily, and we have a retracement into an internal range liquidity pool, I just have a little overview of time frame alignment. This is what's happening inside of that intermediate term perspective. If this was a monthly internal range liquidity pool, the daily would be framing a market maker buy model off of that monthly internal range liquidity pool. And if it was on the weekly chart, we would be framing a 4-hour market maker buy model off of that weekly internal range. And if it was the daily chart, we would be framing a 1-hour market maker buy model to the daily external range high. Now, how I trade it. So step one, we have to wait for price to reach a monthly, a weekly, or a daily internal range liquidity pool. Step two now is only dropping to the aligned time frame if there's SMT divergence at the internal range liquidity pool tag. The SMT will be your sign of price reversing from the internal tag to the external range draw. SMT will confirm all of your trades. I always say this all the time. If there's no SMT, then there's no trade. That's how I always operate. When SMT occurs, that's my trigger to understand that a smart money reversal is yet to come. Now, this is just a little depiction as to what the correlated asset would look like if I have a low resting here and price reaches that gap on the stronger pair that I'm going to focus on, and the correlated asset is the weaker one. It runs that corresponding low. That is my sign that the market is telling me that there is strength in this asset and weakness in this one inside of a higher time frame key level that I could then watch price on the aligned time frame for a change in state of delivery to then start focusing on positioning myself to the external range target. So now we have step 1 and 2 set. Now all we have to do here is wait for a change in state of delivery off of that higher time frame key level on the intermediate term time frame. We're looking at the last down close candle that creates higher time frame SMT and tags that internal range liquidity pool. So what our confirmation would be is a candle closing above the body high of that lowest down close candle that created the higher time frame SMT and tagged that gap. So this would be our last down close candle, and then what we would wait is either the next candle or whatever candle it takes to then close above that body high, which would confirm an order block and a change in state of delivery. And if you haven't watched my last YouTube video, this is labeled as a high probability bullish order block. But also the low here is now called the smart money reversal, initiating our market maker buy model to the external range high. So for me, what I do and how I show you guys this in the forever model, my entry in the market maker buy model would be the low risk buy off of the change in state of delivery candle, which is the high probability bullish order block. So I would enter off of the body tag of that order block, and I would just target a 1 to 2. And if I wanted to hold the position to the external range target, I would just close 80% of the position at the 1 to 2 and leave 20% to the external range draw, the original consolidation of the hourly, 4-hour, or daily buy model off of the key level. And then I would have my stop break even with the trade just risk free. So now we have the smart money reversal, we have the low risk buy, and what we have next will be stages like accumulation and reaccumulation. Because in a market maker model for a buy program, there is the smart money reversal, the low risk buy, accumulation, and a reaccumulation stage. If it was a market maker sell model, it would be a smart money reversal, a low risk sell, distribution, and redistribution. But for here, let's say that I missed my entry off of the order block tag and I couldn't capitalize on it initially. Now what we would do here, we would look at the sell side of the curve of the market maker buy model. We look for up close candles which create mitigation blocks. So I'm looking now at any opportunity that can be presented to myself after the low risk buy for accumulation stage of the buy model program. So what I would do here is I would drag a box from the wick high to the wick low, drag it out to the buy side of the curve, and I want to see PD arrays form inside of these POIs for my next area of entry, which would be accumulation stage of the program. Just like here, what you want to see is price closing above that high of the up close candle on the sell side of the curve, confirming our mitigation block. Now we want to see a fair value gap be formed inside of that mitigation block. This would be where I would be looking for my next entry if I missed the low risk buy. And another tip that you would do here for more confirmation, look for SMT divergence inside of that fair value gap when price reaches the accumulation stage. If you wanted to refine it even more, you can drop down to the short-term perspective like the M15 or the M5 if you were on the 4-hour or the hourly, and then you can frame a market maker buy model from the external high of this swing, from the internal swing from here. But now we have the smart money reversal, the low risk buy, and accumulation. And the next stage would be reaccumulation, which would be price expanding from that mitigation block and that PD array that formed inside. What you would expect now is any bullish PD arrays to be respected for that last stage of the market maker buy model. So let's say price expanded and we closed above the down close candle here, created an order block. I would expect price to hold that level and then have close to no drawdown and just expand, completing it to the original consolidation high of the internal to external range move. And just like that, this would be a clear depiction of a perfect market maker buy model completion. And on the next slide, this is just exactly how I frame my trades. This is GJ on the hourly chart from a daily internal to external range move. This is the internal range liquidity pool. This is the down close candle that we labeled off before. Price closes above it, we tag the order block, and then price expands higher as our first entry. Let's say I missed this area. Price then has expansion higher. We have a mitigation block here, and then what do? We tap the mitigation block, the fair value gap inside, create SMT, and we expand directly to our external range draw. Same thing on AUDJPY. This is the 4-hour chart from a weekly internal to external range move. Price has the last down close candle that sweeps liquidity, creates higher time frame SMT, changes date of delivery, taps the order block. You can enter here. Say you missed this entry, price then expands. You wait for mitigation blocks to form. There's a mitigation block here, drags it out, fair value gap with SMT inside, another mitigation block, fair value gap inside, and then we just expand to the external range targets. Now, this is exactly how I trade all market maker models that I look at. I look for the higher time frame key level tag. I look for SMT in that key level before I drop to my aligned time frame, and then once I know that there's SMT, I can frame the smart money reversal and then start looking for opportunities to tap and tag that external range draw. Trading the continuation of a market maker model is always easier than trading the reversal. That's always why I say internal to external range moves are much easier than external to internal. But this is my view and my depiction on how I play out price. If it makes sense to you, I hope it does. But I really hope that this found value to you and it was an easy explanation. But if you have any suggestions for future videos, please let me know in the comments below. I hope this helped, and like always, take it easy guys, good luck, good trading, and I'll catch you again in the next upload.